Welcome to the Creating Wealth Show with Jason Hartman. You're about to learn a new slant on investing, some exciting techniques, and fresh new approaches to the world's most historically proven asset class that will enable you to create more wealth and freedom than you ever thought possible. Jason is a genuine self-made multimillionaire who's actually been there and done it. He's a successful investor, lender, developer, and entrepreneur who's owned properties in 11 states, had hundreds of tenants, and been involved in thousands of real estate transactions. This program will help you follow in Jason's footsteps on the road to your financial independence day. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to episode 1464. This is your host, Buzz Lightyear. And why is Buzz Lightyear hosting today? Well, you know what his famous saying is, right, folks? You know what it is. Yes, you do. To infinity and beyond. Wow. Jerome Powell, our Federal Reserve Chair, let me tell you, this guy has got guts. He makes no bones about it. You know his position. He's no Alan Greenspan who spoke in code, in hieroglyphics. You had to interpret Greenspan, and nobody could do it. There were people that almost dedicated their careers to interpreting our former Federal Reserve Chair, Alan Greenspan. And he was a long-running Federal Reserve Chair. Now, he wasn't the most recent one. We had Bernanke, then Janet Yellen, and now we got Jerome Powell. And Jerome Powell, wow, never let a good crisis go to waste, Jerome. I mean, and you know, I just want you to understand something. I don't know what I am. I don't know what I'm doing here. Yeah, how do you like that? Your guide, your host, does not know what he's doing. Makes you feel really comfortable, doesn't it? Now, I don't know. You know, I was going to say, I'm not sure if I'm criticizing Jerome Powell's Fed or not. I really don't know. I just haven't come to terms with it yet. But he said, quote, "There's no limit," unquote, when he was speaking of the coronavirus response. And, you know, you've heard that vibe. It's probably not news to you, but it's a recent quote, and it was in the Wall Street Journal. There's no limit, Jerome, to infinity and beyond. Yeah, that's where we are, folks. I hope you're looking forward to those $42 lattes at Starbucks. Yep, $42 for one latte at Starbucks. That's going to be the price. I don't know, maybe not. You know, we certainly seem to be getting away with a lot in this country, don't we? We can print, and, you know, there are consequences. There's certainly been inflation. Okay, I can hear the fools out there that say, well, Jason, inflation is very low. No, it's not really that low, but it's low enough, okay? It's low enough. And I'll put it this way. Compared to what is always the magic question. In comparison to the amount of money creation and the amount of QE, quantitative easing, which, by the way, those aren't exactly the same things. We've talked about that before, but it's close enough for government work. And compared to the amount of money creation, inflation has been low. You know, mathematically, if you just look at the increase in the money supply and you look at the supply of goods and services, which have actually recently contracted. There's been a contraction. This is supply-demand shock, right, that we're living through. And I think that's going to get a lot worse. But if you look at that, then you would think that inflation would be dramatically higher than it has been. And so it begs the question. And by the way, our guest today is the wonderful Consuelo Mack. She is back on the show today. Of course, she is a famous anchor and reporter. You've heard of her, of course, and she's been on the show before, but she's back again today. So we'll get to her in a few minutes. But yeah, you know, if you just did the math and you said, wow, there's all this additional money chasing actually a smaller supply of goods and services, then you must have inflation. You must. It must happen. So it begs the question, well, it's a really complicated thing. It's like that Facebook relationship status. It's complicated. That's the best status of all. Everybody, no matter what your relationship status really is, you should just put it's complicated, because it's always complicated. Married, single, in a relationship, doesn't matter. It's always complicated. Oh boy. So it begs the question, has all the money hit the streets? That's one question. What has inflated and what hasn't? Assets versus consumer goods. I tell you, have you noticed the prices at the grocery store lately? Well, you probably couldn't notice them because you were wearing goggles and a mask, right? But if you did bother to notice, just recently, prices have increased quite dramatically. I went to Trader Joe's the other day, $160 at Trader Joe's, which is a great deal, by the way. I think Trader Joe's is an awesome store. Hats off to Trader Joe's. And you may not live in an area where you know what Trader Joe's is, so look it up on DuckDuckGo, not Google. And at Costco, the price is high every time I go to Costco. How do I manage to spend $500? I just don't quite get it. I don't even buy any gadgets. Well, occasionally I do, but not lately. Just buying food, supplies, that kind of stuff. So we'll see. And then what is the strength of the dollar? Weak, strong? Well, obviously it's kind of strong right now, right? And so that is a telltale sign of whether or not there's inflation, but it's complicated. In fact, it's much more complicated than that, any of that stuff. But yeah, the landlords are getting angry. And this is the commercial landlords. This isn't you, because you were smart enough to buy residential properties that you could find at jasonhartman.com. And that's what you were smart enough to do. But the commercial landlords are fuming. They are upset as Starbucks and other big chains seek extended rent cuts. And everybody's kind of using this as an excuse to get a handout, right? So we'll see. There's just a lot of stuff going on, and time is limited. But I'll tell you something. If you want to know what the big kids are doing, the big institutional investors, they are gobbling up single-family homes. In fact, we got another news story, an article here. We're going to talk about this on a future episode. But they are positioning themselves for this mass migration to suburbia, which I predicted pretty much before anyone, I think. I think I did. Do you think so? Go to jasonhartman.com/ask and let me know if you think that's true, because I think it's true. Everyone has come along lately and said, okay, yeah, there's going to be this mass migration to suburbia. And they didn't bother to give me credit for being the first person out there saying that. But I was. I think I was. So, yeah. Keep it between us. It was a secret. I only told you. Didn't tell anybody else. All right. Let's get to Consuelo Mack. Oh, wait a sec. Can't do that yet. So we have a webinar coming up again this weekend, our weekend webinar series. And we're going to kick off the weekend on Friday. Yes, Friday and Saturday. You can register for this webinar on 1031 tax-deferred exchanges and take advantage of the most tax-favored asset class in America with 1031 tax-deferred exchanges. We had some good Q&A on that as well. So go check it out. bit.ly/1031profit. That's the numbers 1031. So bit.ly/1031profit, all lowercase. By the way, Adam pointed out to us, Adam, our investment counselor, you've heard him on the show many times, but not lately. Where's he been? Adam, where have you been? Anyway, bit.ly links are case sensitive. Yeah, so lowercase. bit.ly/1031profit. Join us on Friday and Saturday for this webinar on 1031 tax-deferred exchanges. Get your questions answered. Get your mind at ease. This is a great strategy. We've had so many clients do 1031 exchanges and just profit dramatically from them. This is the favorable tax treatment on your income properties that you don't notice right away. It comes later. It comes later. And we've talked many times over the years on the show here about doing the 2-for-1 or even the 3-for-1 exchange. I've done that, many times myself. And it's just a great strategy how you can increase your wealth and you can reinvest those pre-tax dollars. Again, with income property, we don't have to pay that tax. We can just keep defer. And under current law, then we get to die, which is going to happen anyway. That's not the law. That's just the law of nature. But let's do something good while we're here, right? And the basis of those properties steps up to market value. So your heirs under current law don't have to pay taxes. Wow, is that a great deal or what? Yes, it's a phenomenal deal. Don't try that with selling your business. Don't try that with selling your stocks. It ain't going to happen. But income property, yeah. Yep. It's good stuff. You might be thinking I sound a little chipper today. I know why. Well, I did have one cup of coffee about a half hour ago, my afternoon cup. But it wasn't that. It was because I got some exercise this morning, which wasn't that much, just a little more than usual. But it makes a difference. Get out there and exercise. Or, exercise in your living room, whatever, doesn't matter, but get some exercise. Okay, so let's get to our guest, Consuelo Mack. But right before we do that, just one more thought. When you've been doing this as long as I have, and that's a long time, you come into contact with lots of people that some took action and others waited. And of course, we know in life that the spoils belong to the action takers. That's who always gets everything in life, right? There's an old saying, things may come to those who wait, but only the things left over by those who hustled. And that's true. And you don't have to hustle that much. You just have to make some decisions and you have to act on those decisions. You got to buy those properties and then just hold on to them and let Father Time work his magic, and it will benefit you because you know that, yes, there are two paths you can go by, but in the long run, there's still time to change the road you're on. And it makes me wonder why people don't act. If you know what I'm talking about there, go to jasonhartman.com/ask and let me know. Because yes, there are two paths you can go by, but in the long run, say you didn't make the decision. There's still time to change the road you're on. What's the best day to plant a tree? Well, 20 years ago. What's the second best day? Today. Same is true with investing in income property. All right, here is Consuelo Mack. It's my pleasure to welcome Consuelo Mack back to the show. You heard her on a few years ago. She is host and executive producer of WealthTrack on PBS, former managing editor and anchor at the Wall Street Journal, and the weekly syndicated business program, the Wall Street Journal Report. Consuelo, welcome back. How are you?
I'm great, Jason. How are you doing? It's nice to be back.
Good. These are crazy times we're in. It's nice to have you on the show. Gosh, where do we start? There's so much to talk about. First off, just what is your general take on things right now? Talk about a general question. Take it anywhere you want.
Right. I think there are a couple of things going on. Number one, this virus, this invisible enemy, as people talk about, I think is a wake-up call for all of us, both from a personal point of view and also a professional point of view and from a financial point of view. So I think that's for starters. This is it's a once-in-a-century event. It's global, and it's hitting everyone. And, as we learn more about it and see what the impact is, that even the people who thought that they were going to be immune to it, which are younger people, children under 10, well, it turns out that it's very dangerous for them as well. So I guess my major point is that it's reminded us in this country, we are so lucky. We're affluent, we're entrepreneurial, our lifespans are long. I talked to many of my friends, and many of our expectations were that, we would probably end up, dying in our homes in our 80s or 90s. Most of the diseases that have been conquered, we have vaccines for them. We've got antibiotics. But guess what? Stuff really happens that is completely out of our control. And in this case, again, it's global. It is completely out of our control. It does not discriminate. between, developed countries and developing countries and rich and poor. We are all potential victims, and I think it's a real time for a reset button. So I guess that would be my first observation, is that I think a lot of us are reevaluating our personal, professional, and financial lives.
I couldn't agree more. And Consuelo, I know you've got more to say, but just a note on that. I believe that as we come out of this, people are talking about will it be a V-shaped recovery, an L-shaped, a swoosh, whatever, right? I think it'll be a modified square root sign. And the modification is that when you go up in that V, we will come up to a smaller economy. I think people really are reevaluating. I think there's a PTSD that will exist for many years to come. And I think the size of the general economy will just shrink. I think people are going to be more interested in a bit of a simpler life. Am I right or wrong about that? What do you think?
No, I think you're absolutely right. And I will just add, some new information that I have, which would be everybody talks about, they're concerned about the second wave of the virus. Well, there is a second wave happening right now in the economy, so which is being tracked by Ed Hartman, who is a guest on WealthTrack, who's Wall Street's number one economist for 39 years running. And, what he's most concerned about is, he said, we've had the first wave was the shock where the economy just stopped. He said the second wave is the after effects of the aftershocks of this, and that is the fact that there are so many small businesses and large businesses where their revenues have just stopped, and they can't ride out the next, 2 months, 3 months, 4 months. A lot of them are going to go out of business. They're going to, they're not going to just lay off workers. They are actually, going to terminate them. So I think you are correct. I think the notion that we're going to get back to where we were with record, low unemployment in any time soon, even in the next, 3 to 5 years, I think is not a good possibility. I agree with you completely. I think this is a game changer.
Yeah, I do too. And I think it might be with us for an entire generation. It's a big time game changer, if you ask me. What else did you want to say before we went off on a slight tangent?
What you were talking about, I think frugality, kind of what my grandparents, the way they used to live a simpler life, I think that is true. I think that cash reserves are extremely valuable in times of crises. And I think for most of us now, I want cash reserves because I don't know where the next crisis is going to come from. And you mentioned that Ray Dalio, who is, the most successful hedge fund manager right now,
he said cash is trash.
Wrote a terrific book called Principles.
Right.
And he's been saying cash is trash.
He's wrong.
Cash is not trash. He is dead wrong. Cash
totally
is king.
Yeah.
And, to think of cash as an investment, asset that doesn't give you returns is not the way to think of cash. It is in a separate category of its own. And I think its value has been underestimated. And I think now we all realize how important it is to our financial security and our sense of well-being.
Yeah. And that doesn't mean, I think, to be fair to Ray, he was probably saying that in the sense of inflation, destroys cash and you do need to invest, obviously, right? But for the vast majority of people, that if they have a small business, maybe a restaurant, they've got 16 days of operating capital. Like, you can't weather any storm with 16 days of operating capital. You need more cash than that. So cash is not trash. Yeah.
Right. No, but I wouldn't apply the same standards, quite honestly, to a business that I would to us as individuals. Mm-hmm. So I think it's very difficult for businesses, unless you're Warren Buffett, to hold big cash reserves, because you've got to put that capital to work. Mm-hmm. And but I think for individuals, I think it's become an imperative that we need higher cash reserves, and we should still be investing in the stock market and the bond market. But so that brings up yet another point that I would like to make, and that is that the value of U.S. Treasury securities, they've been maligned. They're the most maligned investment class and have been for the last 10 years. Everybody's saying, they were saying this when the 30-year Treasury was yielding 5% or 10%. I mean, 5% for the 10-year Treasuries as well. That it's expensive. You can't possibly make money. You're going to lose money. Well, that's not the case. U.S. Treasury securities have been a terrific investment, number one. But number two is that they are instant liquidity, and they're also, you are guaranteed to get your principal back. So they have a tremendous value as an asset class, as an alternative to the risk investments like equities, but also as an asset class that you'll get your principal back, and they're very highly liquid. And so the value of liquidity also cannot be underestimated at times like this.
So it sounds like, from you saying that and kind of sticking up for treasuries, which very few people do, by the way, in the investment world, that you're thinking that inflation is not a concern. Would that be a fair statement?
I would say it is not a concern now, and this has been a deflationary shock. And if what you believe and that I believe, I'm not sure, and I might disagree, the degree to which the economy is not going to come back. I am very optimistic about the entrepreneurship in this country, and I'm very optimistic about that Americans are hardworking and they're creative, and that we will come out of this. But I don't think it's going to, inflation I do not see as being a big issue for at least 3 to 5 years.
Some have talked, and I've been talking on my show a lot lately, about this rather rare economic malady that we saw in the 70s, of course, of supply-demand shock, which initially is deflationary, and we've certainly seen that already in some assets, but then it becomes inflationary later, and it really kind of sucks, for lack of a more sophisticated term. Do you think that's true, that's a concern?
I guess what I would say is, I mentioned Ed Hyman earlier, Wall Street's number one economist. And he's saying, when it becomes a concern, we can kind of deal with it then. But right now, it's kind of the last thing on our minds. And if anything, we're more concerned about, deflation. And so I think that we'll be able to adapt our portfolios and our strategies when we start seeing some inklings of inflation, but right now it is MIA.
Yeah. Consuelo, I've got to ask, I'm guessing, do you live in New York?
Yes.
Yeah, I had a feeling you did. And, one of the things I've been predicting, I've, developed a whole presentation and strategy called Pandemic Investing. Believe it or not, I actually got the domain name, pandemicinvesting.com.
Congratulations.
I know, that was pretty good. I was surprised.
Very good.
For $8. I didn't even have to buy it. And, one of the things that I'm talking a lot about as I'm doing this presentation around on other shows and such is I'm predicting this pretty big migration out of high density environments. 2 weeks ago, I had Dottie Herman on my show. You might know her. She's the CEO of Douglas Elliman Real Estate. And against surprisingly candid discussion against her own self-interest, I think. She was talking about how people will leave New York City and other high-density environments because they can't socially distance. And, I'd been saying that for 2 months now, and she just reconfirmed all my beliefs. Do you think that will be part of this kind of PTSD that will linger long beyond, even after there's a vaccine, where we'll see what I call the rise of suburbia? I think suburbia is kind of coming back. Do you agree or disagree?
No, it's something that I think about on a daily basis because I am in the city and I have a son and daughter-in-law and young baby who are in Connecticut, and they are really glad they're there. So I am of two minds. One is I think you are correct, that I think if we are able to move, that a lot of people are not going to want to live in a high-density environment. So I think you're correct about that. But my other observation is, as I look around the city, is that if people are able to work from home, And then maybe living in the city, as long as you're not taking the subway to work every day and you're not in a dense environment in, your workplace, then maybe the city, with all of its conveniences, can still be a good place to live. I don't know how people are going to vote. And I do know that looking around me that they have voted during this pandemic, if they can, to get out of the city during this pandemic.
Yeah. Quite literally voting. This is quite literally voting with your feet.
It is.
Yeah.
It is. And so, it's going to be very interesting to see how it turns out. And I certainly know for a fact that it's happening in households all over, especially the tri-state area here, because this is where the epicenter of it is in this country. Whether or not it's happening, quite honestly, in other cities, and you probably have a much better read on that than I do, where the COVID-19 has not had a huge impact, I don't know if they feel under the same pressure. I mean, a friend of mine's son who lives in Denver was playing golf the other day. So they're, in other parts of the country, they're not as affected.
It's definitely going to be interesting to watch, but I think as these restrictions lift, there is going to be a big push for moving, as people have been cooped up in maybe houses they don't like or condos or apartments they don't like. They're going to try. And with the combination of that and the fact that a lot of them have learned that they can work from home, even though before they thought they couldn't. And now their boss has accepted that it's okay for them to work from home because they've been doing it and they're studying from home. So, they're not going to the college or university. They're doing all that at home, which I think is going to lead to the collapse of the university debt enslavement complex, thankfully. And that'll be good because nobody's going to pay $50,000 a year for an online degree, even if it's from, a really top school. They're just, without a college experience, they're just not going to pay for that. I just don't think they're going to pay that much for it. They'll pay something, but not the kind of exorbitant fees they've been paying.
Right. No, I think you're right about, college education, except I would say probably the top 100 schools or whatever, that they will probably still be able to attract students. But when you think of how many foreign students have been paying full freight and they're not going to be coming back anytime soon, and, what is, if you can take your courses online, even at top colleges, why would you, go there except for the experience if your parents can afford it? So I agree. It's finally, universities have competition.
Yeah.
And they haven't had it. Prior to this.
It's a good thing. They need some competition.
It is a good thing.
Yeah, it's healthy. It's creative destruction will occur. So, Consuelo, thoughts on, like the financial markets, the stock market, bonds, real estate, any of the asset classes. What are you thinking?
I mentioned, I think liquidity is going to demand a premium. And so the value of holding stocks during this, which you can sell and have remained liquid, versus bonds, which are not liquid for a whole number of reasons. I think that stocks and publicly traded stocks are going to become more valuable. The markets, it's so interesting, where we've had the global economy fall off the cliff, basically, and the U.S. economy, and the stock market doing incredibly well. Everyone's talked about this disconnect. Well, the markets, they're a leading indicator. They react on a change of direction, and we're seeing some change of direction. We hit the bottom, and so we're starting to see things percolate. I mean, Ed Hyman, again, I just interviewed him, which is why I'm talking about him so much. But, he said, we've gone kind of from really bad to better. And better is not a lot better, but that the markets respond to a change in direction, and that's what's going on with the stock markets right now. I feel like the market's ahead of itself, but I'm not. I'm not sure, and I'm obviously hesitating because I don't know, and the markets can change in a dime, especially if we have this second wave, which many of us are afraid of.
Well,
but let me just add one more thing. Sure. What you're talking about, and this is your specialty, is the value of home ownership as a residence. I think it's definitely been accentuated in this. I think that for retirees, that homes can be a really good source of income through crises. In that, you can, if you've got a big decline in the stock and bond market, and you don't want to, take out, your payout because it's going to be your principal's going down, then a home equity line of credit can tie you over. And also reverse mortgages. They're now largely, FHA programs, the home equity conversion mortgage, the HECM. So a reverse mortgage is not a bad idea for your primary residence if you need another income stream. And so the home can be a very valuable asset, especially for retirees.
Consuelo, I'm really glad you mentioned reverse mortgages because that is a rarely talked about thing. And I think it's an interesting vehicle. Of course, like anything it's not really that new anymore, but it's still sort of new. It hasn't been widely accepted. And, there have been a lot of scams in that world, like anything. When
Years
franchising
ago,
came out, there were lots of scams too. But, things after a while, they smooth out and they figure out.
But it's different now because the FHA, again, backs this home equity conversion mortgage, the HECM. It's a government-backed program, so it's regulated now where it wasn't before. So I think that's made a big change, made a big difference.
Yeah, that's very interesting. That's very interesting. When you were on my show a few years ago, I don't know if it was your quote or you were quoting someone else, but you said something to me that I'll always remember. It was a great line when we were talking about, I think we were talking maybe about Meredith Whitney's book, and she was on the show. She wrote that book called State of the States, and we talked about these migration trends into the business-friendly states and out of the business-unfriendly states, not to mention what's going on in California with Tesla right now. It's an interesting battle. That's going to be one to watch for sure. But and you said this great line. You said the Midwest is my favorite emerging market. And that was absolutely spot on,
That was Nancy Lazar, who is the chief economist at Cornerstone Macro. And yes, and actually the Midwest is still her favorite emerging market.
Yeah, I agree.
And the Midwest will come back from this. And, another big victim of this is globalization. And, we're all looking at, I'm looking at, and every vitamin that I take or whatever, I'm saying, was this manufactured in China? Because if it was, I'm not going to swallow it.
Yeah, right.
And, Zantac, for instance, its ingredients that were made in China that are cancer causing. There are all sorts of things. Where do we get the supplies, these critical supplies from? And that is being, a lot of that's going to be repatriated to other countries and back to the U.S. And I think that's positive.
And what's interesting about that is Trump is going to get his wish. This whole thing is like a win for the Trumpian agenda, right? Bring jobs back on shore, control the borders, made in America. That's all what, support the middle class worker. That is going to be good. And you can comment on that. But I don't want to forget to mention, a lot of these people sitting at home all this time have been thinking about, maybe I can start a business. Maybe I can improve my skills. Maybe I can learn how to do coding. And I didn't know how to do that before. I was just driving an Uber and now I can code. This is good for a lot of people. And it's going to be good for the economy in a lot of ways too. Let's hope. There's no data on this. This is just anecdotal, of course, but any thoughts?
So it's incredibly painful. And you and I both know this, both from a health point of view and also from an economic point of view. And again, it's unprecedented for governments to say you have to cease doing business. I mean, this is it's unimaginable. And so the pain, we haven't totally seen what the full pain is going to be through this cycle. But I do agree with you that this reset is going to enable many of us to rethink the way we are living and working. And I think that is a positive. But there are a lot of people it's going to be a terrible blow, and they're going to need help. So it's just as simple as that, and they're going to get it. And I will say, as far as President Trump is concerned, and this has nothing to do with politics, but he was right in taking on China and calling them out. And this populism and nationalism, I think, and globalization is going to be a loser in this, and it should have been challenged, and it's being challenged. And the populism and nationalism that, think of your country and, your fellow citizens and what's going to benefit them the most, I think the pendulum is swinging back that way, and it had gone too far the other way. So I think it is a positive.
Yeah. So that means upward pressure on consumer prices for consumer products because made in America is more expensive, but it means more jobs too. So that's a good thing. And when you say it was right for Trump to call out China, which time? Like, are you talking about the trade war before COVID, or are you talking about the response?
I'm saying before COVID and now.
Yeah. Right. Right. Okay.
Yeah. I think both times that people were businesses especially and governments were too afraid to alienate the Chinese. Yeah. And because it's such a big market. Well, now, many countries, not just us, are saying to the Chinese, you are not acting as a responsible world citizen, and therefore we're not going to do business with you. And I think this is the first time that's happened, and Trump was early on it. Yeah,
very interesting. Last thing for you, FinTech. We're seeing all of this great new stuff. We see millennials that just have a totally different, idea about banking and the way they manage their finances, and then Gen Z coming up after them. What role does FinTech play in all this? Financial technology is what I mean, FinTech.
No, I know.
Yeah.
I think it's really exciting. And, I'm a very slow adopter of any new technology, but I'm looking at what my millennial son and all of his friends are doing, and they are on, these online financial planning platforms, and it's fabulous. I mean, I think it is really positive. So I think FinTech is a win. And, my generation, I just need to, get with the program.
Does that mess with Wall Street? Does it disrupt the entrenched Goldman Sachs and stuff like this? Or are they so insulated from any disruption that it'll never matter?
No, well, I mean, Goldman Sachs is adapting. They've got this Marcus, this online savings program and banking. So, but I think there's a lot of challenges to the way that Wall Street used to do business. But they've got really smart people working for them, and the ones who are smart enough and savvy enough will adapt, and they'll probably flourish as well.
Yeah, good stuff. Consuelo, wrap it up with any closing remarks and your website.
Right. I will just say, one more thing. We talked about the value of, things like liquidity and cash. I'm also going to say the value of Social Security. 8 out of 10 Americans depend on Social Security for an income stream. And I think Social Security will be there even with all of these big deficits. It's not going to go away, and it is an incredibly valuable benefit and a necessary one for many Americans. It's been underestimated and underappreciated, and I think through times like these, more and more people are really appreciate that guaranteed income stream for life. So I'll make a plug for Social Security as a program.
Boy, you're funny. You're promoting treasuries and Social Security. That's so unorthodox.
It is, and I'm a free market person as well, and I believe in the capital markets. But there are some things that are working well, and that is one of the programs that is working well, and so is cash, and so are treasuries.
Yeah, good stuff. All right, give out your website.
Oh, it's WealthTrack.com, and we would love to have all of you join us for our weekly program and our podcasts, and we cover everything to do with building financial security to last a lifetime. So it's WealthTrack.com.
Excellent. Consuelo Mack, thank you for joining us.
Thank you so much for such a fun and interesting interview, Jason, as always.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.